Okay, welcome everybody for our weekly live stream on deal makers, right? We're going to talk about the deals that we got going on. And today we actually have a special guest that's going to pitch one of his deals. So stay tuned. Okay, let me do a quick intro. This event is brought to you by Real Estate IQ. One of the key product that we have is the distressed motivated sellers, specifically the pre-foreclosure leads that are extremely effective when it comes to bringing you leads. So you might want to check it out and get in the deal flow. Okay, you can also check out our website. This is an all newly designed website that has all the market updates updated on a weekly basis. You also get in the know of what events are happening, what new events are going on, and new deals too. Okay, lots of success stories. I'm gonna skip them for now. And a disclaimer for this event. Okay, everything that we're sharing here is for educational purposes only, and we have a lot of folks that catch up on the recording after the live stream, and so please enjoy and always do your due diligence when you're looking at the deals. Okay, and if you need help looking at a deal or closing a deal, you can send it over to me, and today we actually have a special deal that we'll look at together. So the agenda, we just finished with the intro. We're gonna jump right ahead to the market update, and then we'll start looking at some of the real deals that are happening right now. In fact, there's a closing scheduled for tomorrow. And then our feature topic is gonna be on the current market intelligence, and as a wholesaler or investor, what's advantageous, right? What's the trend on the market right now, and what makes sense? What's the right strategy? And then we'll close. And if you're in Dallas, there's a live event tomorrow morning at 9:30, and really high quality type of networking event. So if you're in the area, don't miss it. Okay, we're expecting a big crowd. So real quick market updates. So some homes on the market are selling faster than others. Others are just sitting. And so you just got to understand that even in a slow market, if the house is well priced and also if it's move-in ready, it's going to move faster. So pricing strategy is something you want to pay attention to. And then the pricing is now softening in key Texas markets, right? Austin, Dallas suburbs are seeing a decline of 1 to 3% in pricing. And then inventory is also rising, which gives you more negotiation power as a buyer. And we're going to look at it from a market intelligence standpoint. We'll dive into that in a little more detail. So a couple of deals update. Here's a deal in Groesbeck, Texas, which is, I think, within an hour drive from Waco. And this is an interesting deal. This is the one that's set to close for tomorrow with Tamla, our flip partner. And so it's asking for $129,000. We got under contract for $100,000. The rehab budget is roughly $70,000. So if you kind of run the math, and the ARV conservatively is at 240. We're actually putting it potentially a little bit higher as well, but just to be conservative, 240 is something we feel very comfortable with. And based on that, right, 170 all in divided by 240 is about a 70% deal. So that allow us to kind of move forward and kind of get funding and set everything up for closing. As the time goes on, we're gonna start. I guess let's say the closing is successful and it goes well. We'll start the rehab project on this property, and we'll share more progress on the deal as well as it progresses. Okay, so today's feature deal. Before that, disclaimer, we're not real estate brokers or agents, and always do your due diligence. Everything's an estimate. So we got a deal in Huntsville, about 67%. This is a really strong buy and hold property, and something's worth looking into. We have quite a bit of interest on this deal already. This one is in Throckmorton. What's interesting is that it comes with 4 lots and a lot of room and opportunity for build. So for those that are looking into a rental, this might be a interesting place to put some rental units there. In fact, right across the street, there are duplex units that are being rented out, and there are quite a few of them right across the street from this property. Next, I like to invite Mr. Herman Walker here. Let's see if we can get you up on stage and present this deal. Let's see, Mr. Herman, if you could, I think if you could send a message on the chat, I'll be able to find you and invite you to the stage, I think. Okay, so maybe we'll give him a little bit of time to work on that. I have the slide deck actually, but I can't really I can present as well as you. Okay, so Herman, I'm gonna invite you to the studio. Okay, and let me see. Maybe I can put up the slides you sent me as a way to facilitate this. This is our first time doing this. Hello, sir.
Hello there. Can you hear me?
Hey, welcome.
Good.
I see you got a very nice looking, very pretty deal here.
It's unusual, yes.
Let me download these. Are you able to share your screen, Herman?
Let me see if I can do that here. Live studio.
If you can't, I'll be your backup.
Okay, I'm trying to find which. This is, I see a screen with a plus in it. Should I share that? Is that where I click?
Yes, sir. Yeah.
Okay.
That's the one.
Okay.
Present or invite or something with the plus sign.
Okay, share screen.
Okay.
Okay. Do you see anything yet? I hope I did it right. Let me see here. Let me do that again because it didn't seem to come up on there. Let me see, do this again. Share screen. I have one monitor. Okay. Share screen. Do you see anything yet? Let me see here.
Not yet.
What is it?
Okay, so let me see. Let me be your backup plan here.
Okay. I don't know why it's not sharing.
You sent me 2 files. Which file would you like me to share first? Is it the prettier looking one?
The first one with the numbers on it.
Okay, first one with the numbers.
This is basically the deal. Oh, I see. I'm seeing. I don't know if you see me. Okay. Yes. Make it a little larger.
Okay. 1 second. Okay. Full screen. Ta-da.
Okay, that's better. Yes.
Okay.
This is a deal that I came across. Um, there's a builder contractor who actually has this property,
Mm-hmm.
and they're building more properties. And a realtor called me about it and said that he would do a deal to sell the property, but to also rent the property from you. It's a house that's about uh, 3 million, $2.9 million. They want 550,000 down, uh, and to make it viable, um, he would like to have $100,000 after the first year with the interest, and then what 150. Uh, the mortgage is like what the interest rate on 1.5 million is 7.5%. Then the second mortgage is 850 at 2%. But what's really good about this deal, I consider, is the owner of the property will rent the property every month for 20,000 a month, right here.
Owner will lease it back, basically.
Yes, and he will pay all utilities and taxes and everything. I mean, after you break down the numbers, uh, it would yield $8,000, a little over $8,000 a month from
Mm.
what he's on. He wants to lease it from 3 to 5 years. The reason is he wants to make this a model home. He's building 19 more, but he want to be able to keep this one, and well, he actually is going to sell it, and I can make it out of at times a bed and breakfast. He's It's going to be furnished by them. He says him and his wife is probably going to live in it for a while, but and not all the time. And the property should increase about anywhere from about 3% a year. You take that into effect, and the amount that they're paying every month, and the leasing of it, it sounds like it could be an opportunity
Mm.
that he's letting you do this. The main thing is the $550,000 down, and at that point you're okay. But this is a sort of a luxury type property, and if you make it, you can use it at times as a bed and breakfast, or you can use it for meetings. Not some companies like to be in a place where they can meet, for a weekend with in this type of atmosphere and property, and you could probably uh, lease it for a weekend for maybe these companies they pay you 20, 40, $50,000 to do that
Mm.
because of where it's located and the type of property it is. And so for meetings, surprisingly, I was in computers for a long time, sales and tech, and since I was in the sales career, every year we'd go to some big place. It could be San Francisco, it could be Arizona, it could be and they'd lease this place for 3 or 4 days, and they pay a lot of money. And there's a lot of companies still do that. Says we want to go here, go there. This is on a marina with a clubhouse, um, and it's amenable to people want to meet. But the thing is, if you can get the property and after he will rent this from you, so you could be making money for 3 to 5 years, because he want to use it as, like I says, um, as a property. He's building other properties like this, about 19, he said, and he want to be able to come in and show other buyers this property, and it's real luxury.
Got it.
And so, looking at the numbers, it could make sense with him renting it for 3 to 5 years, And the only thing you do have to come up with is that after the first year, another 100,000, and after the second year, another 100,000. And
And Herman, are you looking for an investor? Or are you looking for a buyer?
an investor,
Okay,
I'd
you're
like to find an investor that can invest with me and get this property.
got it. You're looking for an investor to put up 750,000
Well, no, only 550,000. That's all he
to,
want down
to start.
to start.
And it should potentially cash flow, I guess if you're collecting rent 20K a month.
Well, the rent, you're not collecting all that. He pays all the utilities and everything else. When everything is paid out, you'll have 8,000 left per month.
Right. So the first 2 years, I guess the cash flow will go back to paying the principal.
Yes, but you also at times when they're not using it, can have a little campaign where you can actually rent it out or lease it out for a weekend for events.
Are they? And I think you mentioned that, but maybe I missed it. Do they plan to live there, or are they gonna lease it as like a model home or something?
Well, he would live in it, so it will be fully furnished, and his wife, him and his wife would live there for a while, but they have other places, and so if they wanted to rent it out over a weekend or something, and I could do it
Okay.
to organizations that would need something like that.
Gotcha. And can you tell us about the first and second mortgage?
The first mortgage is right here, 100,000. Let me see here. And the second mortgage, and all you're doing is paying the interest on the mortgage, not just 7.5% on the first one and 2% on the next one.
Is the 1.5 million? Is it like what type of mortgage is it?
Regular mortgage. Matter of fact, the property, if we get it, the property, he says it will be in my name. Period. He won't say, he doesn't. He's going to actually like selling it.
So you're going to take over the existing first mortgage, and is the second mortgage a seller financed note, or is it also?
Well, both of those are seller finance. This is his property, and this is a deal that he would make with you.
Okay, so he's selling at 2.9 million, and he's breaking down the note into two mortgages.
Right, over time.
And then he's collecting interest only. And is there a balloon? Like, how long is the?
No, there's no balloon. He's going to lease it for at least 3 years, but could be 5 years at 20,000 a month.
Mm-hmm.
If you look at the rest of financials, that means that after you lease it, you have $8,000 left per month, which is coming to me, and it would be in my name. All right.
Understood. But then, okay, so you got two mortgages, right?
Mm-hmm.
So you're paying interest only on these two mortgages,
right?
And then what? Like, when is the principal due? So,
it's really that 5 years down the road, if he was finished renting, then I have to do. My point is, 5 years down the road, the value of the property is going to go up. I'd probably sell it. I wouldn't actually keep it unless there are ways to actually. But it's sitting at 2.3 million now. He's building some more. It could be at 5 million in 5 years. 4 million. Look at. I don't care if it was 3. It's 3 million now. Let's say it was 4 million in a year. You could sell it, or other things may come along. But if he actually is renting it and paying you most of everything to help you, as a matter of fact, he's helping you along with owning the property.
And what's the builder's motivation, sir, to sell?
He's building 19 more of these, and he needs a model home. He needs this model to sell the rest.
Got it. Okay. He needs a model home, and he's gonna live in it.
This is it.
He
will not live in it all the time. He's renting it. They don't have to live there all the time, but sometimes they will. You know, if they have other places. But he was saying that it's furnished and everything else sure is livable.
Okay.
Do you want to show the picture of it? I should set you a picture and everything, I guess.
Yeah. Yeah. I'm just trying to understand the deal, and what's in it for the investor. Okay, so.
Okay, that's the property. It's a nice home. If you go down and look to the bottom and look at the schematics of it, this is what the purchase would be. High-end model, $20,000 per month, 36 months. That's what he will be paying himself, because he want to keep it as a model home. So he actually is going to pay that. But go down to the bottom and take a look at the structure of the house, and then I'll tell you where it is.
Okay, so I see the purchase price is a little bit different. This is because it's a 30-year term, and the other one is owner finance, different price.
Yes.
Because on your sheet, it's 2.9.
Really, it should be 2.7. I told him that's what he didn't change.
Okay. Cash and cash return, DSCR. Okay. Year one economic return. What does 4D framework mean? Is it these four?
4D is the I guess the framework of the house. And look at the to the bottom there and look at the interior. It's two. You over there to the left, you see two.
Total year one economic impact, 81% return.
You can click over there to the left down. You see the two items at the bottom.
Okay, let me just go back. I want to see what that 441 and what is it 81% coming from. Okay, because you invested 540 in equity, and so they're saying, okay, these are the benefits. All right. Property feature. Okay.
That's the marina right beside it.
Get the ocean view.
Yes. Yes.
Okay, I see. This is an actual photo, right?
Yes.
It's not like an AI rendering.
Okay. Don't think so. This is what it looks like. This is exactly what it looks like. That's what he said.
I'm looking at my other screen here. All right. Okay. Okay. A new build.
And that's first floor. You can bring your boat in, or RV. You got space for two cars. It's luxury. Period. It's a luxury type place, and it's located in Florida.
It's in Florida.
Off of what you call Merritt Island. That's over by Cocoa Beach, and it's close to the Kennedy Johnson Space Center.
Okay, I see.
I'm from Florida.
You are?
Yes.
I didn't know that.
I know all about that area. That's on the East Coast, and even my sister lives in that town. So,
okay, let me see.
I know the area, and it's beautiful. So this is luxury, and nowadays you got a lot of millionaires, multi-millionaires coming along that are buying these properties.
What's the name of the city?
It's Merritt Island, but if you ever heard of you ever heard of Cocoa Beach?
No.
Oh,
I might have, but no.
Yeah, it's right
Does
off.
not ring a bell.
Yeah, it's right off I-95. If you go down, you got Melbourne, Florida. You got Rockledge. You got Orlando. If you come 40 miles straight east of Orlando, you come over to
Okay.
Cocoa, and
Cocoa
you got the
Beach.
beach over there, and you got all of this other stuff.
I see. Yeah, I've never been to this side. Oh wow. Okay.
Yeah, I'm from Fort Pierce, which is down by Vero Beach and West Palm Beach, and I'm from the East Coast there.
I
And
see. So
it's
you know the
beautiful.
area.
Always have been.
Cool.
And you got the millionaires over in that area.
Very cool.
So I understand the opportunity because I'm from Florida. I've lived there, and I know what people deal with. He's going to build 19 more right in the area because it has marina and all kinds of amenities around it.
Cool. Thank you for sharing. Would
Yes.
you? Okay. And then what next? What would you like to happen next?
Well, if I could find an investor to come in, pay the 550,000, we own it together and go from there. And in 4 or 5 years, if we actually the property which should appreciate, and probably make $1 million, we split that, and other things.
Cool. So we have.
You have to look at it and see where the opportunity is down the road, and says, "Hey, is this viable?"
Yeah. So for those that are here, if you're interested in the deal, you can. I think probably the best way is to shoot us an email, and I'll connect you. I can send you
Yes.
all these documentation too.
Yes, unusual. It's an unusual investment, so better than a house. But if you think big, you get big things.
And then Herman, are you aware of the Dallas event tomorrow? I guess
I just heard it today, and
I guess it's not too it's not too last minute, but there's a lot of folks that are actively doing deals and raising capital, and there's a fund manager there too.
Yeah,
something to think about.
It's in Dallas, right?
It's in Dallas.
Yeah,
Dallas.
yeah,
North Dallas.
Yeah, I wish I had known before. I have some things. I'm in Houston, so I'm not too far away. But
yeah,
if I'd have known before, I'd probably try to make plans to come up.
Would be a good network.
Yes.
Especially for what you're looking for.
Yes, I do a lot of networking.
Thank you. Thanks for showing us your deal.
Yes. Okay.
And anybody interested, you can reach out to us or directly to Herman.
Yes.
And Herman, if you could type on the chat, the best way to reach you. I think that's also a.
Let me see if I see the chat again. Well, did the chat go away? Let me see up here.
Okay, maybe I can move you back to the audience, and then okay, and then sorry I cut you off. I'm gonna move you back to the audience, and then you can use the chat. Okay, cool. Thank you, Herman. That was interesting. There's a video tour too. Okay, we just added this segment for anybody that actually have deals that you're looking at. You can bring it here. We can look at it together. If you want my feedback, I can give you some feedback too. Okay, lots of deals in our within our partners group and our partners network. So if you're actively pursuing deals, you can certainly reach out to us. You can scan that QR code, and we'll match you with the deals we have currently available. Another thing you could do is if you got a property under contract, you can reach out to us and we can find a buyer for you too. Okay, we have a deal accelerators program, and it's wait list only. It's about executing, right? How do we consistently build a pipeline so it generates deals on a regular basis, And I think to me, the biggest challenge is know exactly what needs to be done and just execute. I think in the beginning, when we're just looking at deals, we spend a lot of time trying to figure it out. And then, how long do we keep going in one method before we try another one? So, there's a try and true method that you can just follow. And you just need to focus on execution and meeting daily activity goals first, and creating a habit and kind of, right. I think to gain traction is all about consistent execution. Okay, so let's talk about our next segment, which is our market intelligence. So we have a new week of market intelligence here for you. Ta-da! All right, we are on to Q2. Some key numbers, right? Mortgage rate has dropped down about 6.3%. Is the Fed rate about stable, and the S&P 500 has gone up. Kind of macroeconomic numbers. So a couple of things that we're looking at, that affects us as real estate investors, right? Number one is the macro environment, the numbers. These are the numbers we stay on top of because it tells us, how the mortgage is going, and depends on the rate. It's gonna determine how many buyers, right? If the buyers are gonna stay on the sideline or are they gonna move into the market, and the stock market also plays a factor along with the Fed numbers. But we pay a lot of attention in the 30-year fixed rate because that's where affordability of a buyer kicks in. And then the other side, you also want to look at the inventory level, right? Is it a buyer's market or seller's market? We're looking at a little bit over 4 months now, still pretty much about more balanced market, and the inventory has been going up. So that's something to be mindful of. I would say, as we are actively pursuing deals and talking to distressed sellers, this one seller that I was just talking to in the San Antonio area, you start looking at number one, they are distressed and they need to sell very, very quickly. And if you start looking at the neighborhood, there's actually quite a few houses in the same neighborhood that are for sale as well, and they're all dropping their prices. So it's creating a very interesting environment where, as a buyer, as an investor, you have a lot of negotiation power. And in this particular case, for this seller, I think the way for this seller to exit is to do a subject to, because there's not enough equity for this gentleman to buy out his mortgage and get out of the deal. So sub two is probably the way to go. And now, anyway, going back here, the third circle that we look at is the distress level, right? Distress circle, and we're seeing a lot of filings that have been increasing. Okay, so all that is kind of combined to create an environment that if you are in the acquisition side and you have a good solid number of buyers that are actively acquiring properties, right? It's a really good spot for you because you have a lot of folks that are very motivated to sell. Okay, so I'll just let y'all read that. This is kind of something that I pointed out on the cover page. And by the way, if you're interested in this report, you can just fill out the form for our newsletter, and then it'll route you to a page where you can download these weekly reports. And I find a lot of value in these reports, thanks to Mr. John Huang for putting all these together, right? Doing a weekly research and putting these reports together. So now we're on top of how the market is doing. Okay, so we're looking at a lot of buyer leverage right now. Back in 2021, 2022, there were the interest rate was much lower, right? It was much more favorable to the sellers, but now the seller doesn't have a lot of negotiating power, and we're seeing very moderate price growth, if at all, and houses are sitting on the market, and a big percentage of listings that are on the market that they are experiencing price cut right now. Okay, so if we kind of look at the major metro area in Texas, right? Austin, San Antonio, Houston, Dallas, Fort Worth. The number one buyer's market is San Antonio, and anecdotally, the sellers I've been talking to, they're having trouble selling the house. So that creates an opportunity for an investor. Okay, this is a very cool radar. Okay, you got 4 factors: inventory pressure, right? If there's a lot of inventory, it doesn't sell as well. Extended days on market is sitting on the market. Price is softening, and whether it's a wholesale opportunity in the city, and then you can see the 4 different colors, right? The red one is Austin, and you can see it's kind of almost filling out this whole kind of square shape. So Austin is an interesting opportunity, right? So is San Antonio. Houston is a little bit smaller in terms of the size, so the opportunity is not as strong. And then DFW is kind of the smallest. Okay, so if you're in the Austin, San Antonio area, or if you are kind of remotely investing in the Austin, San Antonio area, those 2 are the markets that's worth looking closer into. Okay, and then from a end buyer's perspective, right? If you're selling that to a investor that does long-term rental, just something to keep in mind of that rent in Austin and DFW have gone down year over year. Now, of course, a city is ginormous, right? It really depends on the neighborhood and the zip code. There are areas that are experiencing rent growth as well. Here we're looking at kind of the whole kind of metro area in general. And for short-term rental, right? Austin has an average daily rent of $220, which yields to, if we're assuming about 60%, right, occupancy rate, monthly revenue about $4,390. And if you kind of start looking at, the distress level, right, which is something that we pay a lot of attention to as investors, we're seeing a surge in distressed seller data. Nationally in Q1, we see a 25% year-over-year increase. And the completed REOs, REO means it's a bank foreclosure. It's gone up 45% year-over-year, and that's a big news, because if you start thinking about it, banks don't want to hold a real estate, right? So what that kind of creates is a dynamic where a house that gets a short sale offer, a lot of times the lenders would prefer to sell it through short sale instead of having the house go into foreclosure. So it's always kind of a case by case and kind of time of the year, and what kind of REO inventory they're looking at type of basis. So we're seeing opportunities for short sale right now. About this time last year, we pursued some short sales, and it was much harder to negotiate with the lenders. They weren't willing to budge, and we got a couple of short sale opportunities now. So we're gonna see how those are gonna go. And if you're only looking at the foreclosure auction, right, and trying to buy deals at the auction, that's really just the tip of the iceberg. There's a lot of distress signals that we should be paying attention to. The pre-foreclosures, right? Once they hit pre-foreclosure very soon, they're gonna be foreclosed. And then you have tax lien, probate, evictions, right? All of these are extremely important signals of distress, and certainly something that we should continue to monitor and also integrate into our marketing campaign and get your distressed sellers. Okay, so especially for the I guess the professional players out there, right? You gotta look at more than just one type of distress seller. So this is a really cool matrix that we have been compiling on a weekly basis internally. So this is where we monitor the foreclosure numbers in the major counties in Texas and Florida, which is something we cover mostly. And you can kind of see how the numbers are moving in here. Okay, we also monitor whether the county has been delayed, right? If the county website is offline or there's filings, and then we are delivering the data, we're capturing the data. It's in progress. So this is the most updated information we got for the pre-foreclosure for each county. Okay, so let's talk about the next step, right? Let's say we get the leads, right? These are cold leads. Well, the next step is to turn a cold lead into a warm lead or hot lead through booking appointments, right? Booking a phone appointment, right? Getting them on the phone so we can gather the information we need to qualify the deal and submit an offer. So here we got some average number of 6.4%, 8.2% for cold dial to live connect. And then the industry average is between 12.5, right, to 12 to 14%. Now, if you're working with the top VA team, you might be able to reach a little bit better, basically connect to booked appointment, almost 20%. And that kind of turns, these are really awesome data, right? Your cost per qualified appointment is going to be about 85 to 150 each. So now start thinking about, what's your closing rate, right, through this channel and this type of appointment. And typically, the industry accepted number is that if your cost to acquire a deal is about $2,000, that's an acceptable number, because if it only costs you $2,000 to get a house under contract, right, you make a profit on the back end, and the number still works out. Okay, so this is the playbook by different type of players, right? If you're a wholesaler, you can look at the listings that are over 90 days and also the ones in pre-foreclosure, and watch out for the inventory search. If there's a lot of sellers in the same neighborhood, you have a big advantage in terms of negotiation. For flippers, stay within your 70% ARV. We actually have some folks that are, trying to acquire at 65% ARV. And there are still opportunities there. It's just harder to get those under contract and take such a big discount. But they are available. They are around. And so you want to protect your downside as a flipper. And then for rental, rents have been softening, so you want to kind of pay attention to that and make sure you stabilize the assets in terms of rent, or you can ask for a steep acquisition discount. So for deal makers, these are the kind of three main things that's going to optimize your deal flow. Number one is you want to have distressed seller data. There are tons of different types of data that you can leverage. You got the county distress data. There is also say, absentee owners and different types of signals. You can combine them together. The MLS also has a source of distressed seller data too. We were talking to some folks that chose to sell on the MLS, but she was about to go into foreclosure. You can leverage a VA conversion funnel. Okay, the cost per appointment is $85 to $150, and then also look for houses that have been sitting around for over 90 days. So these are all opportunities for you. So in conclusion, you want to secure your pipeline. You can scan that QR code. You can get free coaching and get a sample of our distressed seller report. So we can work together and let's win deals together. We would love to partner with you and make these deals happen. So that's our report. Any comments you got, feel free to share. And looks like Herman also shared his contact information, his email, on the chat. Okay. Well, we want to encourage you to try out this new app that we have developed. It's called dealsnearme.io. You can either type that on your web browser or scan the QR code, and you can start looking at a lot of past deals, houses that was on foreclosure or current deals, right? So really good app and good source to play around and understand what the deals are about. So this app, in my opinion, is designed for beginners that want to do door knocking and driving for dollars. And if you're an experienced investor, maybe you want to kind of train a few folks on your team to get good at it, and they can start generating leads for you. Okay, so upcoming events, right? We got some classes that are pre-recorded on the left. And then we just, we're on towards the tail end of Dealmakers Live. Tomorrow, the office hours is going to be canceled. We'll resume again the following week because we're going to be attending the live Dealmakers in-person event in Dallas. And then there is a open house that you can join and kind of see the opportunities that we see in real estate and finance. To me, the two they come really close together. The more educated we are in both real estate and financial education, we can better help the distressed owners. So if you're curious about the event tomorrow, this is the information. I don't know if you can scan that QR code. It's kind of small, but if you're interested, you can shoot us a message and or just show up. You got the address here. You can take a screenshot, and the address is there and the time is there. Cool. So that's all we have for you this week. We'll see you next week. Have a great rest of the week, and I guess we'll see you towards the end of April. And hopefully you got some more deals in your pipeline and in your pocket. All right. Have a great rest of the day and a great weekend as well. All right. Thank you, everybody.
I'm kind of pitching myself here as somebody who's an experienced investor, but always, I'm definitely new to this business as well. I just want to speak about this product and just how much, it has really helped me, propel myself, get better with talking with sellers, actually be able to close a deal. My strategies right now have been primarily direct mail, cold calling, and cold texting. And I've found a lot of success with Real Estate IQ, especially being able to get in front of customers, have engaging conversations. And of course, I'm hoping to use all of that to build my own business and eventually retire off.
Excited to be here, and I want to say a big thank you to Real Estate IQ. They have the absolute top leads in the industry and just make investing effortless for all of us as real estate investors here in Texas and obviously everywhere else that they're focused. And I'm proud to be associated with Real Estate IQ. Love what you guys do and love how you all help investors so that we can focus on the thing that makes us the most money, which is the job of real estate investing.
I wanted to jump on this morning and give a shout out to Real Estate IQ. I began my journey with them few years ago, just using some of the more basic products, the off-market leads. And since then, growing and visiting and talking with not only Steve, but other people who are involved with Real Estate IQ, I've had the opportunity to actually not only be a client, but I also became an investor with them. And that is one of the beauties of being able to be part of Real Estate IQ, is it gives you the opportunity to grow as an investor, especially in real estate.